Welcome to the live stream, everyone. We start in about a minute or just under. Just checking that the sound works. I always do that because I get into a panic about the technology. We're going to start off with these pages from natural gas intel and natural gas news and so on. Have a look at some of the news, and then we'll have a look at the charts straight after that. I'll also cover a couple of other things if you want to once we finish with natural gas. And I'll also record this video and put it up as a separate natural gas video if you didn't manage to watch it during this live stream. So, and also I've been doing a lot of live streams because I'm busy getting my swing trading blueprint course ready, which will be ready in the first week of September, ready for launch. There's a link below to get onto the early bird list. Make sure you don't miss out on that. As soon as I finish this, we'll carry on. Once I've launched the course, we'll carry on with our regular videos as normal. Right, let's go and have a look at what we've got on the page now that we've got all that out of the way. I've got the natural gas intel, just the story of the day. It's always good to catch up with what the news headlines are. And this one says natural gas futures deflate as forecasts for ballooning hot air face skepticism. And cash prices mixed. September NYMEX natural gas futures early attempt to extend a rally into Tuesday's session failed, as we saw, amid expectations for demand weakness, as weather outlooks pointed to increasingly mild conditions across major natural gas consuming regions. So a bit of a turn down in demand, it seems, but it's still pretty much of a mixed picture. And this is from Natural Gas World. Just a couple of interesting things on the right-hand side of this page. Just these scrolling headlines. Some deals with Japan, some news on Australia. There's just one that sort of caught my mind here. That's this one. LNG is not the marine fuel of the future. It's the marine fuel of today. Global gas perspectives. I'm not sure if I can get into these articles because I'm not actually subscribed to Natural Gas World. Actually, maybe I am subscribed to it. I think I just resubscribed. Oh, no, I didn't. Anyway, so there we go. It's all about natural gas. Is this an interim fuel or is it today's fuel? An important part of the blend. With green energy talks and so on going on. It does cut down on emissions, as this says. It's not a perfect fit. It cuts down on carbon, SOx, and NOx emissions, although there are leakages which create problems with natural gas. That's the main concern, is the leakages of methane to the atmosphere. So not a lot to go on there, but just some headlines and really pretty much mixed bag and very quiet across the sort of news sectors here. There's that article we just read. Australia achieving net zero with natural gas, so a bit of an interest in natural gas. So move away from other fossil fuels perhaps, and this ongoing idea of whether natural gas is a transition fuel or it is actually an important fuel. Let's look at the futures here at barchart.com. Have a look at the spot price. It's just about $2.20, 2199. September futures price 2.205. October 2.34, November 2.71, and then only in December do we get above $3, 3.22. These have all shifted up slightly in the last number of days since we had that little bit of a rally, and these will all move in tandem. So the fact that we're capped at around $3 between November and December doesn't mean that we'll be capped by the time we get there. We could be at $5 by the time we get there. We could be at $7. Unlikely, but we could be. So that's the way it looks on the futures over here, just sort of extending slightly higher towards the end of the year, then dropping off a little bit. Now, I want to see if we can get the COT report up here quickly and have a look at what's going on just very briefly. I haven't prepped for this COT report here today. It's normally what I'll do a little bit later on today during this next session. I'm trying to find out if we can get it, and I don't know where it's gone. Maybe we can't get it here. Yeah, so there it is, actually, a seasonal chart. Just looking at these numbers very quickly, commercial positions added, well, took some off the long side and took a little bit more off the short side, slightly more long than short on the commercials. Producers 226 versus 279, so pretty balanced, a little bit off on the long side and the short side. And the managed money 222 versus 283 to the short side, so slightly to the short side. Significant actually, and then the adjustments 13,000 off the long side and only 5,000 off the short side. So leaning slightly towards the short side on the managed money side of the COT formula, but the swap dealers and the hedgers Let's see where they are. Non-commercials, 307 short, 388, so pretty balanced. And then the swap dealers, 159 long versus 43 short. Now, they're opposite in direction normally to the way the market's going. So the fact that they're long means that they think this market's going to go short. So, but a bit of a mixed bag, really pretty equal on both sides for commercials, producers, managed money. Just the swap dealers signifying a sign of slight concern, really, in that we are angled more towards the long side on the swaps. So, in other words, expecting the market to go short. And that's all of that. And then I'm just hoping you can all hear me. I'm sure you can. If you can't, put something up in the comments. I'm looking at it on the other computer. And then just going across to here, I did put some charts up on X on Nat Gas over the last couple of days, but it's best to go to the charts. So let's go across to the charts. And in order to do that, I'm going to have to switch screens here, if you don't mind. And you're going to look at me for a little bit. And I'm going to share a different screen. It's a little bit clunky. And we should have the charts up here shortly. Yeah, there we go. Right, now let's have a look at the natural gas charts. And again, once I've finished with natural gas, if there's something else you'd like me to look at, please let me know. We could look at some of the other energies like oil, uranium. We can look at TLT, some of the softs and the grains and commodities, things like coffee, cocoa, orange juice, sugar. Then, of course, stocks and Bitcoin and gold, all interesting. We've got trades on many of these instruments at the moment, stocks too. And then also on the currencies, I know those who are trading the euro long, short rather, and the pound short have been struggling and suffering a bit as the dollar index has come off. The fact that the dollar has come off a bit has also added a little bit of strength into things like natural gas and oil, as they're priced in dollars primarily. Right, let's have a look at the charts, and we'll start with this day chart on natural gas. This is the one that you're most familiar with and that we've looked at many, many times now, going back months and months and months. And this has really not changed since yesterday. We did a video on natural gas, not yesterday, the day before, I think. And really, we haven't moved at all since then. We're still trading at 2.2 on the futures here, trading at the NYMEX, the Henry Hub futures. So still trading at 2.2. The spot price is also at 2.2 at Pepperstone, which we'll have a look at shortly. If we look at this on the 4-hour chart, actually, before we go to that, let me just recap what we've done here. Basically, we've bounced off. We've got this triple bottom, just to recap. We surged up from there up to about $3.20 or so. We've come back down to this gap here that was a rollover gap. During the rollover from the April to the May contract, created that big gap. We came back to retest it, didn't completely fill that gap, actually. That's a bit of a concern because we didn't get down to $1.83 or 84, the bottom of this gap. We only got as low as $1.88 on the futures. So still a 4 cents difference between the bottom of this gap and where we got to. However, we did bounce. We broke through these two trend lines, and we're holding now beautifully above the 20-period moving average on this day chart. So what does it look like on the 4-hour chart? Let's zoom in. And you can see we're above all of the moving averages now on the 4-hour chart. There's the 100, this gray line. There's the 200, the purple one. And the red and the green one, the red line is the 50, the green line is the 20. And they're on top of each other. And we're above those as well at the moment and just poking up. What I don't like about this pattern is this potential diamond pattern or even an expanding pattern. Let me explain this to you by drawing in some lines. And let's see if we can find this. Let's go with the disjointed channel, first of all. And it's really something like this. This is a reversal pattern, and it's an expanding pattern or a megaphone or a trumpet, doesn't matter what you call it. And I don't like this. It's a reversal pattern. We're at the top of a move from the bottom upwards. So the move has been long and the reversal pattern is potentially a short. However, these patterns only work out about 70% of the time, particularly this expanding or trumpet or megaphone pattern works out about 70% of the time, which means there's still a 30% chance that this will break out through the top. However, it's just a little bit of a concern. I'm not saying this is going to form. It may or may not. The other thing it could actually form is something like a diamond pattern, or a lozenge, if you want to call it that, which is also a reversal pattern. And I'm going to draw it in like this so you can see more easily. Just draw these black lines in, something like this. And as you can see, that forms this diamond lozenge pattern. in the middle in between these 4 lines. And that's also a reversal pattern. So it looks exactly like a diamond or a lozenge, and we make higher highs and then progressively lower highs. We also make lower lows and then progressively higher lows, making this diamond formation. So that's also a potential reversal. I'm not going to leave these lines in because we kind of know what that looks like, but it's just something to bear in mind that that we're looking at. However, having said that, we're looking pretty constructive. As you saw on the day chart, we're holding above the 20-period moving average. We have done so now for several days in a row, maybe 5 or 6 days. We're also holding above all the moving averages on this 4-hour chart on the NYMEX futures price, the Henry Hub futures price at the NYMEX. Now, let's have a look at the 4-hour chart on natural gas, because this will give us a little bit more of a clue on the spot price. Now, we've got a very similar pattern. Notice that the spot price here on Pepperstone, it's not actually the real spot price of natural gas. It's their spot price, or their non-rollover tradable price, if you want to call it that. But it's not just literally the spot price. It's combined. It's a combination of the front month, future months, and the cash price as well, combined into a single number. Just so happens this is also at 2.1, 2.19, call it 2.2. Very similar pattern to what we saw, holding above all the moving averages, and also this channel top now that we've eventually broken back out through the top of, which is good news. Remember, we traded within it for a while. We then broke down through this channel, bumped up against it from underneath many times, eventually broke back into the channel. Then we got out through the top, fell back inside, and we're back above the top again. So that's all quite constructive on a 4-hour basis. And it looks constructive on the day chart as well. Actually, I'm going to put the day chart up on this Pepperstone chart as well. It doesn't look any different to what we've just seen over at the NYMEX chart on the Henry Hub price. And there's the 20-period moving average, the green line below us. And we're holding above that quite beautifully. We have been above it for now 1, 2, 3, 4, 5, 6, 7, 8 or 9 days. We're also above that channel top. And this pink order block zone, we're above there as well. And we had that big bullish candle 2 days ago. Very good, beautiful bullish candle. Not only is it a bullish engulfing candle, but it's also a piercing pattern. In other words, we made a new low compared to the previous day candle before that, and then reversed and engulfed completely the entire body of the previous candle. That makes it a piercing pattern and an engulfing candle, which is all very bullish. So it looks good on the spot price at Pepperstone on both the day chart and the 4-hour charts. Looks good on the 4-hour chart over at the NYMEX, showing the Henry Hub price. However, if we do not hold this pattern and we have to revisit the bottom, the first port of call will be back down to about $2.05. That's this green line. And it's also where this megaphone pattern bottom is. We could actually get down to $2.04, somewhere around there. I did point out when we were moving down a couple of days ago that that was a potential target for this to move down. We didn't get as far as that, but we probably should have. And we may have to actually revisit that one more time. I don't know. It's also a very key area. It's the $2 level. It's the top of the start of the bargain basement level, I suppose, coming out of the dollar store region. And switching back to the day chart, that, I suppose, green line and the purple gray block beneath it represents the entry area into the dollar store when it's below $2, $1 something. We're still well above there, but we may have to, I don't know, test the top of that and then bounce up again. If we don't manage to hold up above these levels, and particularly the squiggly line, and particularly the bottom of that rollover gap, and that was at 1.82 thereabouts, we could still get to the bottom of that rollover gap and remain bullish. That would take us down to the Fibonacci, the rollover gap, and potentially down to a newly formed trend line. As this purple trend line begins to drift down, we may have to touch, not newly formed, but I suppose newly revisited, touching the top of this purple trend line as a revisit. We have not revisited these trend lines properly yet. We may have to do so, but I think that's the least likely scenario, and I think we're more likely to carry on moving up from where we are at the moment. So that's all on natural gas, folks, and I hope you found that useful. So we're long on natural gas. My last entry was at around about, I think, just below $2. Average price at about $2.09, roughly. I'm looking for this to move up to $3 and maybe $3.40, $50, $60, or $70, somewhere in that region. Along with natural gas, I'll be watching the energies like uranium and Brent crude very closely too. We've now exited our short trade on WTI, and I'll be looking to resell this on a bounce if we get that chance. If not, and we carry on moving down and break below this current recent swing low on WTI, I'll be looking to resell this on a swing back up from underneath, a retest of that breakout point if we do get there, and a bounce off that downwards again. I'll be looking to resell WTI. Targets around about low 60s, maybe into the 50s, and maybe even lower. And we're also long on uranium and UEC. Our last entry price is right at the bottom. We also have slightly higher entry prices on both of these too.
On another level, don't let it slip. Air traps looking kinda smooth like silk. Liquidity flowing, milking cash cows milk. Golden hustle, always in the grind. Shots and trends, money on my mind. Planning for riches, shinier than the rest. With the glitter and the glam, who could contest? Margin calls make you wanna snap, but it's all part of the game.